Good evening, and thank you for joining the San Gabriel Chamber of Commerce for a presentation and discussion regarding the Paycheck Protection Program Round 2. My name is Sandy Roscoe, and I'm the Executive Director of the San Gabriel Chamber of Commerce. We appreciate your interest in and your support of this presentation. We realize it was very last minute, but with all of the questions and confusion regarding this program, we thought it was crucial to see how the San Gabriel Chamber could help. Thankfully, one of our outstanding chamber members and board members, Attorney Paul Chang of Paul P. Chang and Associates, offered to step right in and be our speaker for this vitally important presentation and discussion. As we move through the evening, we encourage you to please put your name and your questions in the chat, and Paul will address them at the very end or as we go on. Now it is my distinct privilege to introduce Attorney Extraordinaire, Mr. Paul Chang.
Well, Sandy, I wanted to thank you. This meeting is recorded. Really want to thank both Sandy Roscoe, Alexis Salamanca, who is our Chamber Board President. Both of them have done an extraordinary job just to make sure that during COVID, all of our business owners have the current status as it relates to all different areas of the law. And what we've been finding is there's a lot of confusion over the PPP, which is the Paycheck Protection Program Round 2. There was a lot of confusion in Round 1. And what Sandy Roscoe and Alexis Salamanca gave a directive is that all of us on the board of directors, we need to, as quickly as possible, get out information to all of our members. This is another reason why we encourage you to join the Chamber of Commerce. So without further ado, I'm going to share my screen. We are going to plug through this as quickly as we can. And it is the Paycheck Protection Program Round 2. Now, this is what I want to say. People frequently get really scared. They think it's very difficult. But everything that you do in life is really based on terms. And what that means is if you understand what a term means, then it's a lot easier. So today I really want to encourage people that are either with us online or watching this after we've recorded it to understand that if you understand the terms, you will be able to understand the Paycheck Protection Program Round 2 a lot better. So let's begin going over a lot of the terms. So just very quickly, the San Gabriel Chamber of Commerce is the first chamber in California presenting this information in a lecture format for its members. This presentation outline, the presentation itself are for general education purposes only and are not intended to provide specific guidance or legal advice about what to do or not to do in a particular case. Although I'm a city councilman for the city of Arcadia, I don't represent the city of Arcadia for purposes of this lecture, but I'm a very proud member of the San Gabriel Chamber of Commerce. I'm a very proud member of the board of directors, and I really look forward just to be able to communicate with you about the PPP. So there are several things that we're going to learn today. The first one is to understand basically what PPP is, and then to understand that there's a difference between PPP1 and PPP2. Now, PPP2 just started yesterday. And so it's very important that we all understand that there are differences between them. I'm going to be using a term called first draw and second draw. First draw and second draw. So PPP1 was last year. PPP2 just started yesterday. There are two types of applicants in PPP2. They are called first draw and second draw. And the reason why that's important is because if you have not received any money in PPP1, you are considered a first draw in PPP2. If you did receive money in PPP1, you are called a second draw. Now, where do we get the name of first draw and second draw? It's from the government. So the government uses the term first draw for those people that have not received money. Maybe your application got rejected. Maybe you missed the deadline. The money run out. The second draw are for people that did get money in PPP1. Now, why is that important? Because if you go to the bank, one of the small errors that may occur is they think that you may be a second draw when you may be a first draw. Well, first draw have different requirements than second draw. So although PPP2 may seem to only have one purpose, it actually serves two purposes. The first purpose are for people that are first draw and their application started yesterday. And the second one are for second draw. Their applications start tomorrow. And we are going to finalize with some tips for applicants. PPP stands for Paycheck Protection Program. The goal for PPP is to protect the income of workers. Now that's very important because if you're seeking to use the PPP for your own personal use, for example, like buying a fancy car, I put a Ferrari there, you don't qualify for loan forgiveness. Now that's a very crucial issue. Understand that the PPP is actually a loan from the government, and later on you get it forgiven. But if you use the money for things that aren't part of the PPP, it will not be forgiven. And in fact, it will end up remaining a loan. And in my opinion, what's going to happen, because it's $284 billion, $284 billion. What's going to end up happening, it doesn't matter whether it's Democrat or Republican or a third party, they're going to put a lot of pressure on the government to ask, what happened to the money? Why did it go all crazy? Why did the banks do this? Why didn't I get any money? And when there's an audit, I believe that there's going to be criminal actions against people that got a lot of money, whether it's PPP1 or PPP2. And again, if you aren't qualified, you end up using it, you're going out and buying a Ferrari. In my opinion, the consequences could be criminal time. So definitely want to be careful. So this is the second round of PPP. And therefore, again, we're going to refer to PPP1 as what happened in 2020. And PPP2 is what's happening in 2021. I provide the definition of first draw and second draw again, because we're going to be using these terms over and over. In fact, if you know these terms, just first draw and second draw, you're going to help the bank a lot when you go to the bank and you talk to them. So again, the first draw, this is a term used by the Small Business Administration, SBA, that refers to entities or individuals that never obtain money from PPP. They are allowed to apply even if previously rejected. This is very important because your bank may say to you, I'm sorry, you were not qualified in PPP1, therefore you are automatically disqualified for PPP2. That is incorrect. So that information that is being put out there is wrong. The second draw is a term used by the SBA, the Small Business Administration, for entities or individuals that previously got PPP funds, PPP1 funds, and now are applying in PPP2. So I don't mean to keep on going over this first draw and second draw, but trust me, if you understand this, you're going to understand the rest of the lecture a lot easier. So you were previously rejected. Why should you apply again? Well, I'll tell you why. PPP1 was extremely confusing, and it's the first time the government provided so much money in a short period of time. Many of the banks that you bank at required you to fill out the confusing SBA form on your own. Many of the rejections occurred because you didn't understand what you were filling out. You didn't even know how to answer it. And because the banks were so overwhelmed, and some of the banks weren't helping their clients fill out the PPP form, PPP1 form, that's the reason why you were rejected. The third point is that banks were making their own mistakes and they were blaming it on the clients. I know that's not what, again, our banking chamber members want to hear, but that's a reality. I believe that banks were making mistakes and basically telling their clients that it was their own error and they were not qualified. And the fourth point, which is a big red flag for PP1, many banks, some banks, were prioritizing their larger clients and getting PPP1. You have to understand, banks really didn't make any money for PPP. So for SBA loans, your bank has to have an SBA division. But for PPP, they didn't really make money. So why were they prioritizing their larger clients? Well, if you have a larger client and they remain in business because of PPP1, they're going to remain as a client at the bank. So unfortunately, and this again is my personal opinion, some banks were prioritizing larger clients to protect them from closing, and therefore that's why a lot of smaller businesses did not get PPP1. So my response is apply. What are the requirements of the first draw? This is very important. If you are a first draw, that means that you did not get any money. You fall under PPP1 requirements, although it is PPP2. Do not use PPP2 for a first draw analysis. This is very important. And I believe that there are a lot of lenders that don't quite understand what that means. So last year there was PPP1 in 2020. There were a bunch of requirements for PPP1. You are a first draw in PPP2, but you are under PPP1 rules and regulations. So this is an example. First draw PPP loans can be used for payroll, including benefits, etc. For PPP1, it's 500 or less employees. For PPP2 second draw, it is 300 or less employees. So if you did not get money under PPP1, if you're a company that has up to 500 employees, you can apply in PPP2. But if you are a second draw and you have over 300 employees, you cannot apply for PPP2. One of the things that I want to say is nonprofits are allowed to apply, self-employed individuals are allowed to apply, sole proprietorships, and even independent contractors. This is not a first draw, second draw issue, but I just wanted to tell people that if you are a sole proprietor, and what that means is it's just you don't have any employees, are you allowed to apply for PPP? The answer is yes. So if you are a Uber driver, you're an independent contractor, are you allowed to apply for PPP? The answer is yes. So there were many people in PPP1 that basically felt they were disqualified, or maybe the bank told you you were disqualified, and that is wrong. That is wrong. Okay. So the first draw get a priority filing date, and that is yesterday at 9 a.m. It already started. So please apply now. So if you already got a did you already get a PPP1 loan? If your answer is no, remember that you are a first draw applicant and should remind the bank of that term so there's no confusion. You can apply if you have 500 employees or less. You do not have to show, I repeat, you do not have to show a 25% gross revenue decrease. That is a requirement of PPP2 second draw. So I repeat, you do not have to show a 25% gross revenue decrease. That is only for PPP2 second draw applicants. You do not have to worry about associating with China, Hong Kong, or Macau. That is a PPP2 second draw. You will apply under a form called 2483. For those people that are applying under a PPP2 second draw, it is a 2483 SD. So you do not have the SD. You are applying under 2483. And on the very bottom, these are the things under the first draw PPP2 that you need to have. Beneficial ownership requirement, Form 940, 941, state equivalent tax form, payroll documents for 2019 or 2020, and payroll statements for February 15, 2020 for the pay period to show that you were in operation. So that's very important, okay? And just to let everybody know that if you contact the chamber or you contact our law office, you get the PowerPoint for free. You do not need to be a member of our association. Now, second draw applicant. Second draw borrowers start on January 13. Remember, first draw borrowers or applicants start on January 11th. Public companies are not allowed in PPP2 second draw to obtain funds. The maximum loan amount has dropped from 10 million to 2 million. The average person isn't going to get anywhere near, but again, under PPP1 rules, you could get up to 10 million. So now the maximum is 2 million. You must have, if you are a second draw, that means you got money on the first draw, you must have utilized the full amount of your initial PPP1 loan on or before the expected date the second draw is distributed. So what does that mean? Let's say that you're going to be getting $200,000 and they've approved you and it's coming down the pipeline in 90 days. You must have used your PPP1 initial draw, or you need to use it up, or you are disqualified. And for a second draw applicant, the revenue needs to have decreased at least 25% in 2020 compared to the same quarter in 2019. And I will explain how to do that. And you must have been in business from at least February 15, 2020. If you started your business last year in March, April, or May, etc., you are not qualified for PPP2 round 2. So the second draw applicant, we're going to continue. So payroll can be calculated in 3 ways: 2019 calendar year, 2020 calendar year, or the past 12 months. Now, just as a quick side note, on average, you're going to get 2.5 times your average monthly payroll. However, if you are in the restaurant or hotel industry, you get 3.5 times your average monthly payroll. That is different than PPP1. So again, this is for PPP2 second draw applicants. The payroll documentation required in the first draw will be in the second draw. So whatever payroll documentation that you gave, it's going to be the same payroll documentation for PPP2. There is no additional documentation that will be required for the second draw loan if the applicant used the full calendar year for 2019 for the first draw, and the second draw lender is the same as the first draw. So if you're working with the same bank, first draw and the second draw, you're not going to be providing any additional documentation. Your lender obviously may require additional documentation, but technically you don't need to have anything new. New eligible entities are now allowed in PPP2, such as 501c6 and news and I think it's medical organizations. I actually think I misspelled that. I apologize for that. So now under PPP2, there were some people in PPP1 that couldn't apply. 501c6 can apply. Second draw applicants have a very strict requirement in PPP2. The company that is applying for a PPP2 loan second draw, again, if you're first draw, you don't have to worry about it, cannot be associated with China, Hong Kong, or Macau. What does this mean? Your company cannot have been created in or organized under the law of those areas. So there are companies that essentially were Chinese companies that had a subsidiary here in the United States that applied under PPP1 and got money and are thinking, wow, this is great. This is a forgivable loan. I'm going to get more money under PPP2. Fortunately, whether you like him or not, Donald Trump closed the loophole and basically said that if you're associated with any of those three entities, and a lot of companies are, particularly in Los Angeles, you cannot have PPP2. Companies with significant, which is undefined, operations in those areas owns or holds directly or indirectly not more than 20% by entities in those areas. So basically, if your company has more than 20% that is held by another company in China, Hong Kong, or Macau, you're disqualified. What does that mean? So let's say that you have a company out of those three areas, and you open up a subsidiary here in the United States. Well, it may seem like it's not a Chinese company, but if those companies are owned more than 20% by investors, et cetera, well, you're technically disqualified. The last one is actually going to hit a lot of people, because although you may not have 20% ownership by a Chinese company or entity, if you have a board of director, just one, that is a resident of those areas, then that person, then your PPP2 second draw, you are disqualified. Again, second draw issue, you didn't spend your PPP1 money. What do? You need to spend it. You do not have to have applied for loan forgiveness under PPP1. However, you must have spent the money, or you need to show that you are going to need to spend the money for PPP2. Reduction in gross revenue. This one is actually going to knock out a lot of PPP2 second draw applicants. So you need to show that your revenue has decreased at least 25% in 2020 compared to the same quarter in 2019. So for example, let's say that quarter two in 2020, you're going to compare it to quarter two of 2019, and you need to show that your revenue has dropped 25% year over year. One quarter is the minimum. The revenue reduction can also be over a full calendar year as well. So maybe you didn't have that much of a drop, but when you look at the entire year for 2019 and 2020, there's an overall 25% reduction. Here's a problem that I'm going to discuss later. For loans above 150, applicants must submit documentation to substantiate a revenue reduction of 25%. Now, the bottom point is very important. If you have a loan under 150, which a lot of people do, right? I mean, your salary paid to the, I love it when people laugh at my law firm because it didn't happen too much. That's actually a good thing. So hopefully they've won something. So if you have a loan under 150,000, you aren't required to have documentation at the time of application for the 25% revenue reduction, but you are required at the time of loan forgiveness. Now, I do have a problem with this because I believe that a lot of people, again, if you're a second draw and you're with the same bank, you're going to go to the bank and you're going to say, hey, I'm second draw. And they're going to say, great, all the documentation is here. We're going to package it and we're going to send it. The problem is this. If your loan is under 150, they don't require extra documentation from you. Then what's going to happen is there's going to be a period of time in which you're going to ask for it to be forgiven. And then your bank's going to come to you and say, give us the docs. And at that time, if you're 24% revenue reduction, if you're 23% revenue reduction, it now becomes an unforgivable loan. It's actually technically a loan by the government. And now you're like, wait a minute, if the bank gives me the money, doesn't it mean that I was qualified? The answer is no. For any loan under 150, there's no documentation requirement apart from you probably checking the box and saying, my revenue has fallen 25%. So this is a danger zone for a lot of clients, a lot of chamber members that we have to be careful of. And I think banks are probably not as careful about it because of the sheer number of PPP2. How do you calculate gross revenue? It's very important. It's basically all the revenue, all right, from wherever you received it. You do not include capital gains or losses. You do not include taxes that you pay to a government entity. And this is very important. You do not need to include your PPP1 proceeds as revenue. So that's very important. So I don't want you to feel uncomfortable about that, because you may say, well, if I, because I got PPP1, therefore my gross revenue hasn't been reduced by 25%. That's incorrect. So you don't need to include that. And I believe that there's some banks making mistakes about that issue. So please understand, PPP1 proceeds do not apply in your gross revenue for analysis of 25% drop in revenue. Again, 2.5 times is the loan, 3.5 times if you're a restaurant or a hotel. You can include, for purposes of obtaining the loan, gross payroll. That's very obvious. But here's something that PPP1, a lot of people made mistakes. You can include all of the benefits that you give your employees as part of your monthly payments to your employees. So a lot of employers actually got less in PPP1 that they could have gotten. So if you give them vacation, if you give them 401k, all of that is included in what you can apply and get money for. You cannot include, however, compensation to employees outside of the United States. That's very important. So you may be paying your employee here, but they're not even here. They're in China, for example. That's not part of the loan amount that you can be able to get. You cannot include federal employment or income taxes, and you cannot include 1099s. Why can't you include 1099s? Well, I told you earlier, 1099s can apply for their own PPP. So they're not part of your monthly payments that you pay to your employees. So you're paying to employees W-2, whether they're part-time, full-time, etc. 1099s can apply for their own PPP, so they're not part of how much you pay and how much you're requesting the government to give you in hopefully a forgivable loan. So the big error for second draw applicants, there hasn't been a drop. So most second draw applicants will not submit new documentation. I repeat this PowerPoint because I think this is going to be a big error for many people. Why? Because they will use their 2019 payroll documents to calculate their PPP2 loan amount. This is enough for most banks to process PPP2. Meaning, again, they don't need extra documents from you. It's like, great. So just to repeat in writing so that there won't be any mistakes, here's the problem. Under $150,000, you do not have to show a 25% drop in gross revenue, but must do so at the time of loan forgiveness. If you have under 15 employees, usually for most companies, that is under 150,000. That is under 150,000. Why? Because you're basically looking at what? About $5,000 to $6,000 per employee multiplied by 2.5, it's bordering around $150,000. And the bank may not remind you and your loan may not be forgiven. And this is what I'm really worried about, is owing money to the government. I mean, it's different if you're owing money to the bank, but if you're owing money to the government, the Small Business Administration, you have the IRS come after you, big issues, big issues. So what if you were not in business in 2019? Remember earlier we said that you have to be in business as of February 15th, 2020, but then you need a comparison between 2020 and 2019. I'm going to teach you how you can still apply for PPP2. So the second draw in operation is for all of 2019 and 2020. You must show a reduction in any quarter of 2020 and 2019. You must provide quarterly tax returns or profit and loss analysis for the comparison quarter. Or if you experience a 25% reduction over the entire year, you can provide the full tax year. Okay, but now we're going to get into, I wasn't in business in 2019. Your bank tells you, I'm sorry, you're not qualified. Your answer is, no, I'm qualified. That's very important, because the requirement is that you need to have been in business as of February 15th, 2020, not February 15th, 2019. If you are not in operation for your first or second quarter of 2019, you can then be able to show a reduction in the third or fourth quarter of 2019. So let's say that you started your business in the middle of 2019, right? How can you be able to show it? Basically, you can show it with third or fourth quarter of 2019. If you are not in operation in the first through third quarter of 2019, you can show a 25% reduction of 2020 compared with your fourth quarter of 2019.
Okay.
So basically, okay. And then if you are not in operation at all in 2019, then you show a 25% reduction in the second, third, or fourth quarter of 2020 with the first quarter of 2020. So basically what you're doing is you started your business in 2020. What you're doing is then taking within the 2020 year a comparison for the 25% revenue drop. How can you apply if you are self-employed? Even with no employees, can you apply? The answer is yes. Although this is a little bit ambiguous when I read it, it still does allow you to get 2.5% of your net profit of the applicant of 2019 or 2020. You need to use the IRS form 1040 Schedule C. However, the maximum loan amount cannot exceed 100,000 if your net profit is 100,000. What that means is if your net profit exceeded $100,000 as an independent contractor, you're not going to be able to get it. If you're a first draw borrower, but you did not get partial forgiveness, basically, if you were a first draw borrower, sorry, the English is written very poorly here, and you only got partial forgiveness, meaning you borrowed $100,000, 50,000 of it was partially forgiven. Are you qualified for the second draw PPP2? The answer is no. If you are a first draw borrower and received only partial forgiveness, you are not qualified to obtain a second draw. Why? Because it means that you didn't use your entire draw for PPP. There is a small exception, but it's small. And it was very difficult for me to understand. There is very small exception. I don't think most people will fall into it. Basically, if you are a second draw PPP2, your first draw, you went to get it forgiven because it should have already been done. And then the bank, SBA said, I'm sorry, I cannot forgive it. You can't double dip into the PPP2. My bank rejected me outright or cannot do the SBA loan. What do I do? You can go to another bank. Sorry, this heading should have been slightly different. So if another bank did your first draw, you can find a second bank to do the PPP2 loan for you. There are some banks that basically decided that PPP1 was too difficult for them, or you were unhappy with them, you can go to another bank. There are some banks that, although you did not apply with them in PPP1, they are allowing you to apply PPP2 with them. So for example, we have Shelly Chia over at Union Bank, and Union Bank is allowing people to apply for PPP2 with them as long as they open up a business account. So that's just an example. Post-loan eligible costs. So this is very important, is that 60% of your PPP2 must go to payment of employees. 40% can then go to your other costs. So for example, interest on secured mortgage, business rent or leases, operational costs, worker protection, which is not paid to the employee, but you need to remember that you need to have a 60-40 split, meaning 60% of the forgivable loan, hopefully, needs to be for your employees directly, and 40% goes to your other business costs, not the Ferrari, your business costs. So here are some members that can be able to help you. Shelly Chia over at Union Bank. This is her email. You do need to open up a business account. We do also want you to know that the SBDC in Pasadena is a governmental body that can be able to help you go through this process as well. We have a personal relationship with the director. His name is Donald, and the email I've put there, and his direct mobile number is there as well. So that's really incredible. There are other finance chamber members that we have: Devlin, Frank, Gabriella, Ethan, Mary, Emmy, Victoria. These are all people that can be able to help you from our chamber navigate all of these issues as well. Here are some documents to be able to help you. The first draw summary for people that are first draw PPP2, the first draw summary is there as a link for you to read. The second draw summary from the government is also there for you as well. The interim final rule for the second draw, what that means is that the SBA puts out what are called interim rules. An interim rule is what we're going to be doing. I do want to warn you that there are new interim rules constantly coming out, but this is the one that I put out, this is the one the SBA put out that I think is the most full and complete. It's about 40 some pages that will explain to you, unfortunately in a lot of legalese, but that's okay, the PPP2 for you, particularly if you're the second draw. And here's a great link. Here is a lender list of qualified lenders that can do the PPP for you. Now, this list was as of June 25th, 2020, but it's for all of America. And technically, if they could have done it for you last year, they technically can be able to do it again for you this year. And the reason why I share this list with you is because there were so many people that were unhappy with either the banks that they were working with, or their banks told them, I'm sorry, I can't do it, and you didn't know where to go to. This link provides you, and these are thousands of institutions that can help you apply for the PPP in general. I'd recommend you call them. It's that simple. It starts off with Alaska though. So it's either, it starts off with Alaska. So you have to scroll all the way down until you get to California. So it's quite a bit. There's another grant that's available tomorrow. And this is through, sorry, there's another typo. You know, we're trying to get this information out to all of our members as quickly as possible. So I apologize for that. But there's another grant that's due tomorrow. You can get up to $25,000. This is through the County of Los Angeles. Very important for you to apply. And basically, if you have gross revenues between $1,000 to $2.5 million, it's quite a lot. You can be able to get this. This is not on a first come, first serve basis. PPP2, some people have been saying it's not a first come, first serve. You can apply until March. I don't think there's going to be any money there until March. You need to apply right away. I think January, end of January to mid-February is when PPP2 is going to run out. So apply as fast as you can. This one though is great. I've looked at the application form, pretty straightforward. It's up to $25,000. It's not on a first come, first serve basis, so the money is there. All applications will be reviewed. So fortunately, it's not a first come, first serve. Are you feeling down because of COVID? Are you worried where your business is going in 2021? Do you want to meet a group of people that want to give you business? Well, we have hundreds of members in the Chamber of Commerce that want to give you business. I encourage you to join. We are one of the least expensive, but one of the most active chamber in Southern California. So I do want you to know that you can call up Sandy Roscoe. She is our leader and our warrior. Her number there is 818-636-1149. Definitely recommend that you give us a call. I think you'll be pleasantly not only surprised and pleased by the quantity of business that comes your way, because we definitely in our chamber seek to give each other more business as a chamber member. We do want you to know the next lecture is on January 21st, 2021. So it's going to be occurring really next week, actually. Today is Tuesday, it should be next Thursday. It's going to be about the new employment laws in the state of California for 2021. We want to warn everybody that the laws of the state of California, there's huge ones that are occurring. There is one big one, which is Cfra, that used to apply to only companies with over 50 employees. It now applies to anybody that has 5 employees or more. Really big issue. It's going to impact a lot of businesses in California. Your employee can basically come to you and say, you know what, I need to take care of somebody or take care of myself for 3 months, and you cannot fire them in any way, even if they are a key employee, which used to be the case for CFRA over 50 employees, but now it applies to 5 employees or more. You cannot terminate if they're a key employee, which is very scary. Wanted to thank everybody that was on the line today and also everybody that is going to be watching it. Again, we welcome you to be part of the chamber. We're a chamber that just loves each other. We want to feed each other business. And I know that many of our chamber members that originally came to us with only one employee now have hundreds of employees. And so this all started with our chamber here with the San Gabriel Chamber of Commerce. And now I will take the 2 questions that I see, and let me go to the chat. How does the government evaluate the criteria based on our sales tax report? You know, this is a question that I had with the bank as well. And basically it's just going to be based on revenue. I asked them, is it based on income or revenue? Because everybody calculates it a little bit differently. And what the bank has told us is it's just the revenue. I asked them, how about accounts receivable? Is that revenue as well? And the bank just basically responded to me, revenue, revenue, revenue. And so I think what's happening is that the guidance is still coming out from the SBA. All of the PowerPoints that I basically have put up have been vetted by several people at the banks that I have relationships with. They've told me that all of the information is accurate, but I've still had a really big question about this 25% revenue. And so I think what I would recommend, because I've looked at other SBA documents, it's based on what's called gross receipts. That hasn't been a word that's been used by too many people, but it's going to be based on gross receipts. That would be my recommendation on the 25% drop in revenue. The second question is, well, that is actually the only question. I think that's the only question. Hold on, let me just see. And that is from June. Is there another question that I'm not seeing?
Yes, Paul, there is another question. It reads, if we didn't use all the money from PPP1 because the county doesn't allow us to open for dining, does that mean we're not qualified for PPP2?
Okay, so basically the rule is that you have to have used or will use your PPP1 money by the time the PPP2 is distributed. I understand that the county has not allowed you to open, but that is the rule. You should have spoken to your bank already about loan forgiveness. And if you have not had the loan forgiven, that's going to be an issue for your PPP2 loan. Now, I said this earlier, the 25% reduction, right? Many banks, and I say this respectfully, I think are just going to take your PPP1 application and put it on the 2483, I believe that's the form, SD, and they're just going to submit it for you. You are going to be running the risk. You know, you are going to run a risk that it's going to become a non-forgivable loan. It's going to become a loan. And so I do want to say that it seems like based upon what you just told me, if you haven't used all the money, then you need to figure out a legal way to be able to do it. For example, rent is 40%, right? If you paid off the rent on it, would that essentially wipe out your PPP1 loan? That would be my recommendation. And I'm not sure if I'm addressing it to you. I'm almost speaking to you as if you're a client. I'm trying to think about different ways to be able to do it. But you have to remember that your PPP1 loan didn't have to be for all of your salary. Many tenants owe money to their landlord right now. And so that is a way to be able to essentially use your PPP1 money to qualify for PPP2. Okay. Are there any other questions at all? All right. So yes, please go to the San Gabriel Chamber.org. The San Gabriel Chamber.org is one of the few websites in the state of California that is providing usable, up-to-the-date information on grants and loans and COVID information. I would have to say that I'm so pleased with the San Gabriel Chamber of Commerce. They've done so much for the community, as well as giving clients to members, but also providing that information. So again, it is sangabrielchamber.org, and we have that on our PowerPoint as well. So there's another question from Karina. I got a loan from PPP1, but because of the 25% reduction in revenue, I don't qualify for PPP2, but I've had to hire more employees to keep up with county mandates. Does the increase in payroll, does it count or not count? Unfortunately, based upon what I've read and what the banks have vetted, is that you need to have a 25% reduction in revenue. Now, I'm sure that there's a bunch of exceptions that I haven't spoken on, but I do not believe that 25% reduction in revenue is a waivable exception, is a waivable requirement. So because of that, the 25% reduction in revenue is the key to be able to get the PPP2 second draw loan. And congratulations, Karina, for getting the PPP1. We're so happy for you. Are there any other questions at all? So look, take my PowerPoint. That PowerPoint is yours. Hopefully there weren't too many typos on it, but thank you for your patience. And you use that PowerPoint as really good guidance. It provides all of the links that I think are necessary for you to understand. PPP2, again, if you have not gotten ever PPP money and you were rejected, you are a first draw. PPP2, you are in line, first place, waiting to get vetted, waiting for the money to come down. You are able to get access where other people don't. If you are PPP2, second draw, applications start tomorrow. Now, there is something that's kind of important. There was something that I read in the regulations that basically said community banks and minority-owned banks are first in line in PPP2 second draw. I don't quite understand what that means. Does that mean that all the applications go in and therefore minority banks get considered first and community banks get considered first? I'm not sure, but it may be something for you to consider in who you're going to be working with, because if they do get some type of new priority in advance, then that's obviously something you have to consider for PPP2 second draw. In terms of PPP2 second draw as well, is that I do notice that the big banks, for example, like Chase Bank, the PPP2 second draw, they haven't even been working with their clients yet. At least that's my understanding. Again, it's anecdotal, and that supports my theory that perhaps there is a community bank, minority-owned business bank, first in line policy for the second draw. I'm not sure. But I do know that in general, again, PPP2 second draw starts tomorrow. I wish everybody the best of luck. Again, join the Chamber of Commerce if you're interested. If you're interested in these lectures and other lectures, and you're interested in getting your 2021 started with a lot of clients, please feel free to join us. We really look forward to hearing from you. Last thing I want to say, I'm not a gardener, but I do know this, that when the gardener gets close to the flower, it's because they want the flower to grow. A lot of us have felt pruned in 2020. We feel that everything's been cut away. I do believe that there is a gardener. I do believe that there is a universal gardener, and I believe it's because he cares about us. That is the reason why he is pruning us and pruning you, because he wants to make your 2021 better. So I want you to believe in yourself. We are here for you as the chamber. Thank you very much. God bless you and have a good night. Take care.